All right, welcome back to another video. My name is Ian Major. I'm an entrepreneur, investor, and all-around raging capitalist. And in today's video, I'm actually going to take a little bit of a detour. If you haven't checked out my last video, definitely go check it out. I'll put a link in the description down below. But it really goes through some of the historical context behind our current day monetary system. And so it traces some of the really seismic events happening from 1870 to present day that shows us kind of how we got here. And I think this historical context is always crucially important to understand. History, as I've always said, is a really abundant teacher, and it indeed rhymes. And so everything we see today, from market dynamics to the economy to the levels of debt we're seeing to the societal unrest, I mean, all of this is tied together, and it's all anchored to the monetary system. And so in future videos, we'll pick this whole kind of cobweb apart even more. But in that video, I talked about how I would do next a video on inflation. So what's the real kind of nature of inflation, what it means for your wealth, what you can do about it. And that's coming, so fear not. But I just couldn't help myself but slip in today's video, which is it too late to buy? Is it too late to buy Bitcoin? Given the week that we just saw, I've got a lot of friends, family, colleagues asking this question, and so I thought I would go through a couple different arguments in support of my answer to that question, which is an emphatic no. In fact, from my perspective, we're still very, very early. We're still in the early innings of this, and that doesn't mean there's not going to be volatility to come, but it's an emphatic no for me, and I think that's something to be celebrated. So today I'm going to go through and pick that apart. I'll go through an investment thesis. I'll go through kind of the moral thesis, or the philosophical underpinnings of why we should be really excited about this. And I'll touch on some of the, what else? What are some of the risks? Because of course there's nothing that's risk-free in this world. There's no such thing as a free lunch. And so I'll touch on those at the very end, and you can make your own informed decision. So before we really dive in, let's just orient ourselves quickly. Right now, it's about 2 p.m., Friday, November 20th here in Dubai, and the price is sitting at about 18,200 US dollars. And so if I look at this kind of weekly view, we can see pretty big growth. It's about 12% or so that we've seen over the last week. If I zoom out a little bit further to the 1 year view, so not year to date, but looking a full year back, I mean, this is up 150% or so. And if I look, really far back, at least in relative terms, we can see that optically we're getting, not too far from the all-time high. And so, that's really begging this question from a lot of folks of, is it too late, right? Is it too late? Is the current price expensive or cheap in relation to the future value of this asset? And so, with that quick orientation, let's dive into the investment thesis. And this, for me, has a few components: the fundamentals, the macro tailwinds that are supporting the surge in Bitcoin that we're seeing and will continue to see. And then finally, some of the really interesting social proof that we've seen over the last few months: major corporations, major investors, mainstream players putting significant skin in the game. And we'll talk about why many of you watching this might be a little bit scratching your head, like I haven't heard that much about this, right? So let's start with the fundamentals. The best articulation I've seen of this is none other than Plan B's stock to flow model. And so you can see this modeling Bitcoin value with scarcity article on Medium, published back in early 2019. This for me really is, and I think for a lot of Bitcoin enthusiasts and maximalists, is the crucial kind of blueprint, or at least the best quantitative framework that I've seen. And so what this is all about is this premise of unforgeable costliness, and this came from Nick Szabo, unforgeable costliness, meaning, the reason that precious metals, gold, silver, collectibles, pieces of art, all these things have kind of inherent value is this notion of unforgeable costliness or unforgeable scarcity. And that just means that, there's real effort required to produce these, incremental units of these assets. And Bitcoin, of course, has unforgeable costliness because it requires like real electricity, like real energy to produce new Bitcoins. And that is a fundamental anchor of value behind its the production of new units of Bitcoin. And by extension, that means that Bitcoins can't be easily faked, right? And so this notion of unforgeable costliness and scarcity underpin the inherent value of sound money, and in the case of Bitcoin, the soundest money that has ever existed. So what the stock to flow model says is, stock to flow. So let's break that down. Basically, for different assets, whether you look at gold, you look at silver, stock to flow is basically the ratio between the stock or the amount of that asset or commodity that is sort of in existence in that snapshot of time, in relation to the flow or the new production of that asset or commodity over a certain specified time frame, usually a year. And so a high stock to flow ratio means that I actually think it's more useful thinking the opposite. If you have a lot of flow in relation to the stock, that's a commodity, right? And so these are things like zinc and nickel, brass, some of these elements that are used in production, right? When instead you look at gold and it's got quite a high stock to flow ratio. And so that's a very useful definition of fundamental scarcity. And as you'll see in the article, I really encourage you to read it. Gold has a stock to flow ratio of about 62. Silver has, about 22, et cetera, et cetera. And so the hypothesis is, does this measure of scarcity have a fundamental relationship with the total market value of that asset? And what the study concludes is yes, there's a statistically highly significant relationship between, a sort of causal relationship between the stock to flow ratio and the total market cap for that asset. And so, Plan B kind of plots out a variety of assets, including Bitcoin. And in fact, there's been a update to that with even more assets, and that relationship holds incredibly strong. Of course, it's not the only predictor of market value, but it is the by far the most powerful predictor that explains the market value of these different assets. And so, Bitcoin is still a little bit below gold, but that's going to change in the next year or so. And so, what results is what can only be described as this incredibly elegant visual that you're now seeing. This is the very latest stock to flow model update I could find. Let's break this down a bit. So the white line here, and keep in mind this is a log scale, as you can see on the y-axis, but the white line here is that stock to flow model. And you can see the colored dots represent the price of Bitcoin in US dollars, and the color of the dots corresponds to the amount of time until the next halving, meaning the reward that miners get when producing new blocks is being cut in half roughly every 4 years. And you can see that, this is performed pretty extraordinarily well. It's just beautiful, right? And so you can see where this prediction takes us to 100,000 plus kind of order of magnitude over the next year or so. The kind of actual prediction that comes out of all this for them is roughly 55,000, and that's again sometime after the 2020 halving, which occurred back in May, and so we should probably expect to see that maybe by end of 2021, for example. And so encourage you to check that out. I think it's a really, really elegant and has thus far proven incredibly predictive model that goes through this. So that's piece one. That's kind of the fundamentals, right? This fundamental scarcity. There will only ever be 21 million Bitcoin ever in existence. No one can change that. No government can change that. And you know, that's fundamentally you know, supports its growing value, right? Because there's going to be more and more demand, as we'll talk about, and we have this kind of diminishing supply curve. Okay, number two, let's talk about some of the macro tailwinds. And so, I mean, you know, I'm sure folks are well aware. Let me just throw up, you know, one example of this, of what we're seeing in terms of the really unprecedented levels of growth in central bank balance sheets. What I'm showing here is, of course, the Fed, so for the U.S., and you know, you can see all the way back to 2008, you had kind of 800 billion in assets on the Fed balance sheet. You know, that spiked up a little over a trillion, maybe $1.5 trillion, to you know, the great financial crisis, and then you can kind of see the ebbs and of, you know, QE1, 2, et cetera. You can then see, you know, in 2018 started to do quantitative tightening, and as many kind of market watchers will recall, there was the market tantrum in kind of fall of 2018. The market did not like that, and so the Fed reversed its stance very quickly in 2019. And then boom, we've seen this truly explosive growth to the tune of about 3 trillion in additional, you know, balance sheet assets. And so this is extraordinary. I mean, this is absolutely unquestionably unprecedented, right? Now, the key though is that a lot of inflation sort of detractors will say, well, where's the inflation been, right? I mean, the Fed can't even hit its 2% target. And that's true. The Fed actually can't cause inflation. As much as they would have you believe, it's really the psychology that they're trying to instill that inflation is coming when they talk about, oh, you know, we're not just we're going to go past the 2% target, right? We're going to go past the 2% target such that it averages to 2% over a longer time horizon. They're trying to influence your psychology. But they can't actually spend that money into the economy. All they're doing when they're printing money is increasing the bank reserves or the base money in the commercial banking system. And so it's the commercial banks that then need to lend that money out to individuals, businesses, other entities who will then spend that money in the real economy. And so that latter part, that kind of transfer mechanism from growth of bank reserves to like actual money with real velocity in the economy, that has not, you know, happened. But what we've seen with COVID is this kind of really, really extraordinary and very quick departure from, you know, the Fed being this sort of, you know, in theory, independent entity to unprecedented collaboration with the federal government. And, you know, you're now basically going to see all sorts of, I mean, we've already seen the stimulus checks. You know, you're going to see a new round of those once the dust settles with all the, you know, all the election stuff. You're going to see more stimulus. You know, you're going to see more municipal, you know, more of the Federal Reserve buying, you know, muni bonds, which enable local governments to spend directly into the economy. So you're going to see all forms of helicopter money coming in that is very, very different, right? That's hugely different than what we've seen at any point over the last, you know, decade. And so anyone who says like, oh, well, you know, it's fine. We can just, all the modern, you know, monetary theorists saying, well, we can just print an infinite amount of money. It really doesn't matter. And then as soon as inflation happens, we can just tax our citizens to quell that inflation before it gets out of control. I mean, it's just a I don't know about you, but I really would not want a group of bureaucrats trying to thread the needle on that one. So unprecedented growth in the balance sheet of the Fed and other central banks. And so you're when you pair that with these novel transfer mechanisms to get that money into the real economy, We'll do a future video on, central bank digital currencies. That's another great way, right? Why do you need the commercial banking system when, the central bank could just directly inject money into your central bank digital currency wallet, right? So we're going to see all sorts of methods for that. And so if you think there's no inflation coming, by the definition of the government, CPI, which is again a very flawed measure, you're mistaken. The other kind of argument is, the U.S. just can't afford positive real rates, right? There's so much debt; it's never going to get paid back. One of my favorite macro voices is Luke Grauman, who you should definitely go check out. But he's got a couple, really nice, tweets here that I think summarize it nicely, right? If we're not going to see any cuts to entitlements, if we're only going to see more spending, if you can't take rates negative, because if you took Treasury rates negative, that's really going to cause a lot of odd ripples in the world economy, given the centrality of the U.S. dollar as the world reserve currency, and there's only one sort of way that this can shake out, and that's being incredibly bullish for inherently scarce assets like gold, but far more explosively Bitcoin. You're also going to see countries that have negative nominal rates, like Germany, Japan, becoming kind of more interested in Bitcoin and gold as well. And then you're also going to see countries that have either instability or devaluation of their currencies flock to this as well. I have Turkish buddy who was asking me about this the other day. So there's a whole slew of kind of macro tailwinds supporting the the growth and prominence of Bitcoin. The final piece I want to go through within this investment thesis argument is some of the social proof. And this is really interesting. So you've seen all manner of, MicroStrategy and Michael Saylor, who, by the way, has $250 million of his personal assets invested in Bitcoin. But MicroStrategy went out and invested, close to $500 million in Bitcoin, and essentially they are now using that as their corporate treasury asset. Right? And you've seen some similar trends with Square. You've seen Citibank coming out with this, wild 300,000 plus price prediction for the end of 2021. I think that's probably aggressive, by the way, and that should give you some pause if a large mainstream bank is kind of getting into this game. So be sort of careful there. But you're seeing, Paul Tudor Jones as well, really noteworthy investors who know what they're doing and who have really demonstrated track record. I mean, Ray Dalio, who's arguably been one of the bigger Bitcoin bears, has recently come out and said, maybe I'm missing something here. So even he's starting to kind of crack. So you're seeing a ton of smart money moving into this, and at the same time, a lot of my friends who are coming to me now are saying, like, how did this just kind of sneak upon us? And there really hasn't been anywhere close to the amount of mainstream coverage of this. In fact, if we look at this, Google search term, kind of trend over time, what this is showing is it's basically anchoring 100 on this scale to the maximum level of search interest, which of course you can see, back in 2017. But we're nowhere near that, right? We're nowhere even remotely close to that. And so this is yet another kind of indication that the surge we've seen over the last month or more is very, very different than the kind of mania of 2017, which really was a lot of kind of retail investors coming into the space, pure sort of speculation. Now, instead, you've got some of the really smart money. I mean, Stan Druckenmiller. I mean, all these guys and gals are coming into this space in a really meaningful way, putting real skin in the game. If you look at the order book right now, you've got, I don't want to tell people, it's almost irresponsible for me to say, hey, wait for the next dip. This is not to say there's not going to be volatility. It's not to say there's not going to be another dip. But I personally believe those dips are going to get bought up super, super fast because you've got all this smart money carefully, right? They don't panic. They plan. They have a plan. They have a bid, and it's going in, and they're going in, and that's kind of all there is to it. So that, in a nutshell, is the investment thesis. The other pieces I think we can really get excited about is the kind of moral and philosophical thesis for Bitcoin. I mean, this is freedom against an oppressive, centralized monetary system. When I go through my next video, I promise, on inflation, this will become more apparent. I mean, inflation is a real tax. And it's not just a one-time tax. It's a recurring tax on your wealth year after year after year after year. And, it's essentially taking purchasing power and therefore value away from common folks. And that value is going to others who are closer to the money spigot. So, large financial institutions, big hedge funds, political insiders, et cetera. And so Bitcoin is fundamentally, not to use the term voting. I think a lot of us are kind of over that word at this point. But this is a real vote against the current monetary system by parking wealth into Bitcoin. This also provides protection against governments increasing surveillance. I'll do future videos on this, but I think anyone who's denying that trend is burying their head in dirt. And it's just honest money, right? There's no way to tamper with its supply or coerce others to give it to you. Sure, there are hacks of exchanges, Mt. Gox, way back, and these things happen, right? But if you're protecting your Bitcoin in a proper way with cold storage, etc., it's just unbelievably safe. And so that means that with a true, honest money, the only way you can get ahead is by providing something of value to your fellow humans. That's it. And that's the essence of Bitcoin capitalism. In closing, just a couple notes on, what else? What are some of the risks, right? Obviously, general price volatility is something that we're going to see more of. It's almost engineered into the protocol itself. And that's why when you look at the Plan B, stock to flow model, you've seen a lot of these big kind of swings and drawdowns. And so we should expect that over time. That being said, as I've mentioned earlier, my view is this surge most recently is very, very different than what we saw in 2017. And so, I think staying on the sidelines is a big risk. There's a very good question, which is, well, why Bitcoin specifically? Like, why won't something better just come along that's equally scarce and is superior, right? And it's a great question. And the answer really has to do with the fact that it's the first of its kind. It's the first fundamentally scarce monetary technology that's ever existed in humankind. And the network effects that come along with that, and the amount of energy production that's going into maintaining and protecting the network at this point gives it such an extraordinary head start. It's difficult to conceive of, of another technology outpacing it. And it's, of course, open source, right? So this is something that's going to see improvements. You have the Lightning developments, that is a kind of good example of that. But for the most eloquent answer, I turn once again to Robert Breedlove and the number zero in Bitcoin. And so I'll link this as well in the description. But this is a fascinating read about how Bitcoin is similar to the number zero. And right before we had the concept for the number zero, a lot of things weren't possible, right? Like calculus fundamentally requires the existence of the number zero. And basically everything that we enjoy today is, in some shape or form, supported by this math. that's enabled. And so the thesis that Robert goes through is why this is so special. It's such a special 0 to 1 binary event that will never happen again in the course of human history. That really kind of rings true when we think about why is Bitcoin uniquely special. So give that a read. I'm not going to attempt to put words in Robert's mouth. He goes through it way better than I do. There's also you see from time to time, and this was very prevalent in 2018 to some degree in 2019, this idea that like Tether or some of these stable coins, there's maybe some funny business going on, right? So you see a lot of anti-Bitcoiners kind of claiming that, well, Tether, which is best known stable coin, no one has any idea as to whether it's truly backed by US dollars. And so if it can just print Tether tokens without being backed by US dollars, then that sort of inflation creeps into the asset prices for Bitcoin and other cryptocurrencies. There's different arguments for that. I'm going to throw up also this study that was done out of Australia's University of Queensland. This was back in 2018 that found no statistically significant relationship between the kind of prior Tether grants and future Bitcoin returns, right? So there's pretty conclusive evidence that this is not these are not manipulations that we're seeing. These are not giant pump and dump kind of schemes that we're seeing in the case of Bitcoin. And then the final kind of risk, of course, is government regulation, right? There's obviously countries that don't allow its citizens to, have Bitcoin. Now, can they control that at this point? No. Will they find ways to try and, sneak their tentacles in? Yes. And it's something we should and need to be on the lookout for. But look, in conclusion, I hope that gave you a helpful summary. I mean, this is an attempt to synthesize a lot of the different thoughts that that I have on the topic, and why I believe it's not too late to buy. In fact, it's still it's a great time to buy and continue to accumulate. We're going to see volatility, but the investment case, the fundamental nature of this technology and its transformative properties is so game changing. And the secondary fact that from a kind of moral and societal impact, this is something we can really get behind, should make you as excited as I am. So we'll leave it there for now. That was a little bit longer than I had originally planned, but I hope you enjoyed this content. If you did, give this a like, comment down below what future topics you'd like to see on the channel. And again, in the next video, I do promise I'll go more into inflation and why it's sort of really nefarious, why it's fundamentally impacting your wealth, and what you can do about it. Hint, we just covered one of the things you can do about it, which is buying Bitcoin. Until then, I'll see you next time.